Thank you, Studio B. Hello and welcome to the first stock review of 2015 with me, Trishna Patel. On this edition, JC and I will be looking at stocks covered in corporate profile this past week. JC is from tradersreveal.com. Now, JC, thank you for joining us today.
Yeah, it's great to be back here, Trish, especially for the first week and also the first review for 2015.
So JC, a new year is supposed to mark new beginnings. Now, was that the case for Bursa this past week?
Unfortunately, if you look from the chart that we do have another sell-off. Now remember on the last episode, what we talk about is the first 2 weeks of selling that we have in 2014. And now it is repeating itself in the first 2 weeks of 2015. This is still the first week. Now what has transpired this round, we have a sell-off also in the US Dow Jones, which is overnight we have a drop almost 300 points. This is due to crude oil breaking the $50 for the first time. Now remember what the OPEC as well as the Saudis say, that oil prices may slip to as low as $20. Now we are $50, so we are still a long way down. Now remember that the Malaysian economy is still pretty much a net exporter based on all crude oil. So that will also have an impact on our Bursa here. Now on the chart that you see last week, we have a nice doji tail in there around 1680, and subsequently the market recovered. But today, as I said before, the market broke below $50 as well, and we have another sell-off in here. Right now, we still have the support at 1680. That would be the limited, at least for this first quarter of 2015. Now, if we break below 1680, then we will see further sliding down, perhaps testing at 1610, which will represent a very, very bad year to start with for 2015.
So I guess investors need to be prepared for this. Now, on New Year's Day, I did a recap on the IPOs of 2014. Now, JC, can we revisit some of those listings? Perhaps you can explain them from your perspective. Now, let's start with one of the biggest IPOs of 2014, IOI Properties Group Berhad. The listing fetched some 1.87 billion ringgit from 3.1 billion existing shares. The spin-off of the IOI Group was done via an in-specie distribution and a restricted sale offer of IOI Properties shares to IOI Corp shareholders. Now, JC, can you walk us through your price and volume chart for IOI Properties Group?
Sure. Now, if you look at the chart in here, the market hasn't done much. As soon as it go out of the trading range around 2 ringgit 60 cent, we see profit taking come back. So, and now the market has broke below the support at 2 ringgit 45. Now remember, this IOI Corp was a sort of a spin-off being paid to IOI shareholder from the IOI group. So the IOI shareholder has really benefited from it. It was, if I'm not mistaken, IPO prices was around 170, 175, but it is still doing above the IPO prices. Right now, it is still behaving very much like KLSE, trading below the 50-day moving average. Now remember, IOI property is very much a dividend play, giving it about 3% dividend yield for the year and a relatively low single-digit ROE so far.
Now, given the rather bearish sentiments of the local property sector, what advice would you give to investors who are actively trading with IOI property shares?
Now, if you have IOI property share, the dividend remaining giving from the year will be good. And now I do believe IOI has a lot of land bank, a lot of projects which has come up, should improve the situation. Now remember, what is pending also is the GST that everyone is talking about. The GST will have an impact on so much on the demand side. Perhaps after the second half of 2015, when the GST has been priced in, and investor would know what kind of impact as well to the bottom line profit margin of IOI property, we could see this maybe resort back to test back the old high at 2 ringgit 80, 2 ringgit 75 cents.
Now, then we also looked at 7-Eleven Malaysia Holdings Berhad. The listing of 7-Eleven was also one of the largest and most notable of 2014. The convenience store chain is the largest in Malaysia and has a dominant market share of 82%. The Malaysian convenience store industry happens to be the least penetrated sector in the region. Moreover, its link to the Berjaya Group bodes well for the company now. JC, all of this hype aside, what does this price and volume chart look like for 7-Eleven?
Now, like it or not, like what you say, it's all really a hype when it started with. After the cornerstone were able to exceed after 6 months, after the 7-Eleven IPO. So we're seeing 7-Eleven now beginning to decline, falling to it's almost reaching below the IPO prices at RM1.38. However, since then it has rebounded and able to break above the 50-day moving average, which is at doing around 155 ringgit. Is this a good buy? On a long term, maybe not, because remember the PE is about 24 times. Now, despite having return on equity about 34 times, it doesn't pay a dividend at all. So investors should really use this more as a trading buy. Perhaps if it does dip back to the below the IPO prices and collect some at that stage. Now, going forward, again, the GST has caused a lot of consumer sectors to sort of really have a directional year, for at least for the first half of 2015.
Now, on its Bursa debut, the stock closed at 10.87% premium to its issue price. It was also oversubscribed by 4.8 times. Now, the stock closed at RM1.50 on the 31st of December. JC, do you think that the stock is worth its valuations?
Now, as I said before earlier on my comment in here, 7-Eleven has been overpriced and overhyped by a lot of the so-called promoter index. Since then, it has sort of gravitated down to earth level, means at the ground level. At this level, I would be interested more around 140 or 130 level to be buying this stock when you see sign of strength coming in here. Now, at the stage, the market will tend to bias towards a sideways movement. Any possibly breaking below on sign of strength, I would accumulate some.
We also looked into the listing of a special purpose acquisition company, Rich Energy Berhad. The listing made Rich Energy the largest oil and gas SPAC on Bursa Malaysia to date. Now, JC, can you tell us a bit more about Rich Energy through your charts?
Now, Rich Energy is one of those special purposes acquisition company. So it is going through same sector like oil and gas. Now remember, we talk about oil and gas, which is really going through very tough times. A pullback in a lot of projects by Petronas would also scale down and affect a lot of these SPAC companies like Rich Energy in here. Now at the current level, the market seems to be accumulating, moving sideways, and that may be a good base to be buying around 60 cents in here. Now remember, SPAC doesn't necessarily pay that much of a dividend at all, and we don't have anything on return on equity. So it is probably better to accumulate at this level at 60 cents and having a stop loss for merely trading purpose.
Now, in light of the recent drop in global oil prices, what advice would you give to investors who have oil and gas stocks in hand?
Now, if you know a lot about Rich Energy and make this as a fundamental play, then there is perhaps looking at the prospectus. Buying at this level will give you some sort of an upside from in here. Now, we do believe oil will continue to slide lower, which means this chart will likely to move more sideways and a little bit biased to the downside. Again, don't buy a falling knife. Don't buy averaging down. Try to average up. That's the advice I have for traders and investors at this difficult time that we are facing.
Last but not least, now let's look at BStead Plantation Berhad. On its listing, the plantation arm raised 1.05 billion ringgit. They issued 580 million new shares to retail and institutional investors. It also offered up to 76 million existing shares in BStead Plantation for sale. Now, BStead Plantation is one of the largest listed oil palm planters in Malaysia with 71,000 hectares of oil palm planted area. Now, JC, what does the price and volume chart look like?
Now, on hindsight, it's easy to say by looking at the chart. When IPO first price came out, the insider were trying to push up the price to around 172, only to distribute to unsuspected investors or traders. And since then, like it or not, BStead Plantation, being a crude oil in Malaysia, tends to follow the crude oil prices. Now, we all know what's happening to the crude oil prices. There has been oversupply in the market and demand are shrinking also due to the slower growth that we see in China. Now, that is also pending, and that's why we're seeing this stock price since August has been really moving to the lower and lower, holding up its level. Let me just show you here, around RM1.46. Now, we all know what's happening now because of the Pantai Timur East Coast flooding. A lot of use are being strained. Having said that, so the palm oil prices are shooting up higher just for very short-term reason because they couldn't get much of the supply out. So there is definitely a yield play in here. Since then, this BStead Plantation should able to hold up around 146, 147 in here. Now, pending on the price, I would like to see a bit more so-called accumulations, probably on the later stage, around 1 ringgit 50 cents before even thinking.
Now, what would you advise satellite investors who are looking to get into plantation stocks?
Now, there are many other plantation stocks in here. Of course, I'm not going to go into it. For time being, plantation like crude oil prices, which is actually having a damper to the palm oil prices in here, that will somehow put in terms of price gain for plantation like BStead Plantation. So what we are looking for is actually dividend yield. Now remember, dividend yield that we see here is only about 1%. Look for plantation stock which pays a better decent dividend like TDM, which have a better price chart, if I'm not mistaken, compared to BStead Plantation.
Now, last week's hot pick was MYEG Berhad. Now, what else can you tell us on this?
Now, if you look at on the insert last week when you saw it, market was hovering around 4 ringgit 40 cents, and the market will try to break up in here. But we all know what happened this week in the KLSE and the overall market. It actually went through a sell-off because of the breaking of the crude oil prices. But interesting enough, MYEG, which is non-oil rated but IT rated to government projects, managed to hold above 4 ringgit 20 cents here. And once the market sort of quiet down, where there are more direction towards the upside, you'll see MYEG breaks higher.
Now, JC, I'm sure you have a hot stock for us this week.
Yes, the stocks to pick really has been very, very tough because of the sell of the year. But we did have one really on the horizon is Carex, which is actually a condom maker, really a family owned, and they actually broke up to 3 ringgit 45 cents in here. A nice what we call a line change. But notice the support that they have above the 50-day moving average or the 200-day moving average is around above 3 ringgit. That was a nice sign of strength. Now, what is sign of strength? Sign of strength is actually where we see demand overcoming supply, and once that is sort of incurred in the chart that you see in here, market will continue to move higher as we've seen for Carex.
Now, I'm afraid that's all for this edition. On behalf of JC and myself, Trishna Patel, have a good trading week. Back to you, Studio B.